I read the news so that you don't have to. Wall Street just spent $33 billion buying itself, not investing in the economy, not giving you better rates, buying its own shares. And here's the real question. What do they know that you don't? So as you can see, the headline says, largest US banks spend record $33 billion on share buybacks. Come in, let me tell you what's happening. So the biggest US banks like JP Chase, Goldman Sachs, and Citigroup have just spent a record $33 billion buying back their own stock in just 3 months. That is the highest level on record. Why? Because profits are booming, markets are volatile, and crucially, rules are getting looser under Donald Trump's administration. So let me break this down from the beginning so we're all on the same page. What is a share buyback? That is when a company buys its own shares from the market. What it does is it reduces the total number of shares available, which pushes up the price, which makes investors and executives richer. Now, let's look at the scale. JP Chase, $8.3 billion. Bank of America, $7.2 billion. Citigroup, $6.3 billion. And Goldman Sachs, $5 billion. That isn't small money, honey. This is system-level capital movement. Why is this happening? Thank you for asking. It's happening because regulators are planning to cut capital requirements, meaning banks don't have to hold as much of a safety buffer as they did before. So suddenly they've got extra cash. And now, here's where it gets interesting, even Jamie Dimon, or Dimon as I like to say, arguably the most powerful banker in the world, is basically saying, yeah, we're doing buybacks, but I'd rather not, which means that even insiders think this might not be the smartest long-term move. So what does this actually mean for you? First, this is a signal. Banks are choosing to reward shareholders instead of massively expanding lending. The second thing, it tells you something about confidence. If they believed the best opportunities were in the real economy, they'd be investing there, not recycling cash into stock prices. And the third, risk is creeping back in. Remember, after 2008 financial crisis, banks were forced to hold more capital to protect the system. Now, those protections are quietly being rolled back. At the exact same time, profits are surging and markets are volatile. That combination has historically not ended very well. So when you hear record profits and record buybacks, just remember, Wall Street isn't just making money, it's positioning itself. And the question is, for what?